Hey, good evening. Neil here with Simpler Futures Monday, September the 11th. And today is rollover day. So we're rolling from the September into the December future index futures products. That's the S&P, NASDAQ, Dow, Russell, mid caps, etc. And there are some who will choose to stay with the September contract for a few days this week, and others that will choose to go ahead and roll to the December. Either is okay. I think there's probably a valid argument for either. Personally, I choose to keep it as simple as possible and go ahead and roll with the exchange, the CME, the exchange's recommendation, which is today, to go ahead and roll today. So that means if you roll to the December products, we've got this premium to contend with and or consider, and that is about 49.5 here. You can see on this row here, 49.5 in the S&P, 196.25 in the NASDAQ, 326 in the Dow YM, 18.9 in the Russell, and 25.8 in the mid caps if you're interested in that. And so those prices are higher than the September contracts. The September contract will be in sync with the cash, spot SPX as of Friday morning. That means that there's basically a 50-point spread now in the ES December contract over the SPX now. So whenever somebody's quoting SPX, the S&P futures will be 50 higher. If you're quoting S&P futures, the SPX is going to be 50 points back, and that spread will come in over time between now and the December expiration. The price difference is representative of the cost of carry, essentially the cost of money now with interest rates being higher, and the dividends paid over those 500 stocks in the S&P over this period of time as well. So it's essentially the cost of money, cost of hold, cost of carry for that period of time, and that is for Q4, the last couple months of the year. So having said that, these prices that you see on here, for instance, like a 46.40, that was 50 back, that was 45.90, rolled up 50 points, is now 46.40. This was a gap mid, and etc. Right? So you look at here on screen and you see 45.35 or 45.40, right? You think, whoa, man, that's that's way higher than where we were last week. A little bit. It's up 25 on the day, but all of that was in the Globex on the Chinese inflation data, and came in lower than expected in the overnight last night during the Globex session. So really, as you can see here, we went out today right where we started. 8:30 this morning, the price was exactly where it is at 3 o'clock this afternoon on the bell. A little bit of price fluctuation during the day today. Not much, honestly. It's really a boring day. But you see it goes out 25 higher on the day. All of that was really in the Globex. The prior settle on this December contract that we're looking at here was like 45.11.12 on Friday of last week, and it's 35 today, so it's up 25 on the day. I go through this rather kind of in detail and lengthy explanation so that we don't look at this price and think, my goodness, look at how much higher we are today. It's not really. It's a little higher, like I said, but then again, it's exactly where we were this morning at 8:30 in the morning. So now in looking forward, well, we've got some prices up a little bit higher to test, and it might very well do that between now and Wednesday of this week, but Wednesday is the VIX expiration, going into a triple witching OPEX at the end of this week. And so for all of these reasons, I'm telling you, this week is probably going to be tricky. Not only that, but there is a CPI, PPI, and a retail sales all this week, and that's just in the U.S. There's also an ECB rate decision and some other things throughout the week as well, some UK employment data and all kind of things sparsely kind of sprinkled throughout the week. But the market's been pretty well bid for a while this quarter. So with the, largely the retail participants being bullish and buying calls, it's the dealer on the other side of that selling the calls, buying the S&P futures to hedge the short calls that they take on when the retail public is, buying calls in a bullish kind of a frenzy or mode. And so when you get into the middle of the week and that VIX comes off on Wednesday, and then the hedge can come off, that long S&P against that short call, SPX call, that hedge can come off on Thursday. And you know how to take the hedge off, right? You have to sell what was long to hedge the short calls, which that can create some volatility toward the latter part of this week. So what all that would suggest is a little sideways to higher early week, and then volatility toward the latter part of the week. And that's what I can prepare you for this week. It's going to be a little wild, especially the first part of this week with the roll is underway. As of this morning, it was like 25% complete. As of Wednesday, mid to late day, it'll be done. All of the majority of the, well, pretty much all really of the roll that is coming out of the September rolling into December will be complete. Historically, 80% of the open interest rolls, the remaining 20% is left to cash settle. And I'm sure it'll be the same this time. It's all pretty much always the same. So you're going to look for some choppy conditions with the news, CPI, PPI, retail sales. And I would anticipate some sideways to slightly higher through Wednesday, and then vol to set starting Thursday when the hedge can come off against the settle on the open Friday morning, where we'll get the final settlement for the September contracts. So tricky week, but that's what I can do to prepare you for it, is to tell you what you can anticipate given the conditions. So that's where I see that we are this week. Hope it helps. I'll see you again midweek. Take care.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me